So the second financial statement I want to guide you guys is about the balance sheet. So what is this balance sheet? A balance sheet is a snapshot of the company's financial position, like assets, liabilities, and equity at a specific point of time. So in short, is to show us the health, monetary health of the company. So for the purposes, whenever we go to the balance sheet, is to assess the short-term sustainability of the business, and of course, to know how safe is it to invest in the business. It's the same. Like when you go to a company, you want to make sure that the company is healthy. Right, there's a lot of asset, a lot of cash, and very minimal liability. It makes common sense, right? Yeah. So this is the place that we go to take a look. Okay, which is the balance sheet. Now, a balance sheet actually looks like this. Generally, it's been displayed. Let's say the asset is on the left side, okay, and the liability is on the right side. And this is how it looks like. Okay, but I make it easy for you guys. Okay, so let's focus on this. So these are the metrics, okay, in the balance sheet that you guys need to know. Yeah. So number one, you go and find their cash and cash equivalents. Okay. And that is the liquid asset that can be quickly converted to cash. Okay. Let's go back to our bakery business. Okay. So let's say the bakery has a 5,000 cash in the bank. Okay. And then 5,000 in the cash register. So in total, this company here, the bakery, has 5,500 cash. All right. The next thing you want to look at in the balance sheet is current assets. Now, the name current is very simple. Current means things that can be converted within 1 year. So when I talk about current asset, it means assets expected to be converted into cash, okay, within 1 year. Okay, let's say for example, in the bakery business. So a cash equivalent is a current asset, it can be converted to cash in 1 year, right? Okay, inventory, let's say your products, okay, can also be liquidated into cash within 1 year, Then accounts receivable, okay, you send your customer, okay, can you receive cash from your customer? Also less than 1 year, so it's around 1,500. So you add everything here, the current asset of the bakery is 9,000. Okay, so the next one you need to take a look is the total assets. In short, total asset is everything, current asset and non-current asset. Again, non-current asset are assets that cannot be liquidated within 1 year. Yeah, so you add everything. Current asset, which we already agreed here, is 9,000. Non-current asset, everything. Let's say, all right, the bakery equipment, the building and stuff, okay, is 15,000. So your total assets is 24,000. Yeah, current liabilities is the opposite of current assets. It means debts or obligations that you need to pay off within 1 year. So that's what current liabilities is. So let's say, for example, in the bakery business, accounts payable, that means that the things that you need to pay to your supplier, for example, okay, within 1 year, I need to pay 1,000. And let's say I have a short-term loan, less than 1 year, I need to clear off one. It's around 2,000. And of course, any other expenses that I need to clear off is 500. So in total, my current liabilities is 3,500. All right. And then total liabilities, the same, like the opposite of total assets. Yeah, the sum of current and non-current liabilities. I add my current liability to 3,500, and I also take a long-term debt, maybe 5-year, 10-year debt, for example, right? Cannot be settled within 1 year one. This is what we call long-term debt. It's 8,000. So it becomes 11,500. Okay, so in the balance sheet, these are the things we need to take a look to assess how healthy the company is. Okay, now let's go through the real balance sheet of a company. Now, in the previous video in my income statement, I used Lululemon, right? Okay, so let's continue back. Okay, Lululemon. This is the balance sheet, how it looks like. Okay, so I guide you where to look at. So you can see this is the assets. They show the assets here first, the liabilities down here. Okay, so as you all know, the assets, you want to see the cash. So the assets here, okay, they separate it into current asset here and non-current asset here. So cash is, of course, current assets. So you want to take a look at the cash amount here. Yeah, we know it's around 2.2 billion. Yeah. Then how much is the current asset? Is they add everything here. These are all everything here. So the whole current asset is this. And as you all know, you want to know the total asset is to add current assets and the non-current assets together. So that's why you add everything. This is the total asset. Simple, right? Okay. Now, liabilities. So let's go down. We all know this is the liability part here already. Yeah. So current liabilities is this amount here. Current liabilities here, they add us for us already. You want to know the total liability is where they add together this non-current liability, is this amount here. Okay, all right. So in short, it may seem quite daunting. Wow, there's a lot of things here. But after, okay, you watch this video, you know where to focus on or what to look at, then you will know it's very, very simple already. Yeah? Okay, so let's go back here. Okay, now, whenever you go to the balance sheet, what we need to look at? Now, simple, assets and liabilities. So you want to make sure when you go and take a look at the company, just make sure the assets is way more than the liabilities. Okay, you don't want more liabilities, very, very common sense, right? Then make sure the cash is a lot. Okay, make sure they can cover any temporary liabilities. And this is the third part I want you guys to learn. Current ratio and cash ratio. Now, current ratio is very simple. Current ratio is where you take the company's current assets here. Okay, can the current assets cover the current liabilities of the business? Okay, that means within 1 year, can they cover back? So let's use this bakery business for example. Yeah, let's say we already know the current assets is 9,000. Okay, and the current liabilities of this company is 3,500. That means, right? Okay, the company has enough current asset, which is $9,000 to pay all of their current liabilities. That means obligations to be settled within 1 year. It's only 3,500. I still got balance. That means it's very, very safe. Okay. Cash ratio to be even more conservative. I just want to make sure that the cash can cover the current liabilities. Okay, let's say for example, okay, because cash ratio means I take the cash and cash equivalents and compare it with the current liability. Can my cash alone cover back these current liabilities? So in this example, cash and cash equivalents is 5,500 and my current liability is 3,500. Even with only taking into account cash only, which is a more conservative manner, I can still cover my current liabilities. So it's very, very safe. Okay, so these are the things that you guys need to take a look at when it comes to the balance sheet. Just scan through, find the things that you need to know to judge the company. Very simple, right? So that's all you need to know about balance sheet. All right, so the next one is cash flow statement. Okay, so see you guys in my next video.